This is George Bayruthi giving you the market report for the whole of the week. This is actually based on the last few week trading and data that we obtain and what we speculate on what is likely to happen the next few weeks. So we're going to start first of all with what happened over the last 2 weeks. On the American market, you can see here in that column here that the market over the last 2 weeks has dropped by 2.3%. Most of it happened last week. As you can see here, that's 1.9 for 1 week last week, and combining the 2 weeks we have 2.3%. We can see that all indices in America were actually mainly falling last week, and the volatility has gone up from 14.8 to 20%. So that's actually an increase in the volatility. The US dollar has gained a little bit of strength, being the haven when the world is a bit concerned about global economy. Usually for some reason money flows into America and pushes the US dollar up. However, remember that when other currencies get weaker, by default, the American dollar gets stronger. The Australian dollar versus the US obviously is an inverse correlation. We were down by 0.3% over the last 2 weeks. Looking at gold over the last 2 weeks went up by nearly 5%. However, most of that increase was about 2 weeks ago. Last week we've only seen a very slight increase. And by the way, on Friday gold price dropped, so that has an effect on last week in total. However, over the last 2 weeks we still see about 5% increase in the price of gold, and you can see here from 1,514 to 1,523. That's the change in 1 week. That is $9.50. Silver over the last 2 weeks also went up by nearly 5%. Crude oil, that's the American West Texas crude oil, was mainly dropped by last week by nearly 4.5%. It actually went up by 4.5%. But however, over the last 2 weeks in combination, crude oil in America was actually down by 0.5%. And by the way, if you want to learn more about the various other commodities, as you can see here, we have data for a lot of other commodities, and there is a market for each of those. And if you want to speculate on what happens to each of those commodities, all you have to do is call us. Now, looking at our mechanical system, before I go into that, we're looking at the Australian market. And the Australian market here, you can see that the ASX 200, that is our main gauge for our total market, was down by 5.4% over the last 2 weeks. Half of it happened last week, 2.7%, in combination 5.3%. As a matter of interest, our market gauge, the ASX 200, is made mainly by 2 major sectors, that is the financial and the material sectors. When both of these sectors are down, the market reacts accordingly. When both of these sectors are up, the market acts accordingly. And you can see here the financial sector were actually down by nearly 6% over 2 weeks, and so is the material sector, down by 5%. Having seen those 2 sectors down, well, obviously we've seen the total market also down by 5.4%. These 2 sectors make about 50% of the gauge, combining the weight imposed onto the ASX 200. Now, looking at our shares, you can see here that AMP was down 5.5%, Rio was down by nearly 11%, and Bramble down by nearly 28%. So we actually like to have the 2 week perspective, because it's actually 1 week is not enough. When you combine the 1 week decline or advancing over 2 weeks, we can actually see how the market is reacting. when we see 2 consecutive weeks of declines, that indicate that we might be in a small correction or maybe a major correction. Now on Friday we've seen the Dow closed 1.2% higher. That hasn't really major effect on the total weekly result. We've seen that the week performance of the Dow was very, very negative. That's a very small correction. Maybe the bargain hunting came into the market on Friday, pushed up the 3 indices, as you can see here, the S&P 500 and the Nasdaq, which is technology index, were all up slightly, taking small changes in the drop for the whole week. BHP on Friday was down 1% in New York, and Rio was down 0.3%. The StoxX 50 index, which comprises most major European market, was up by 1.4%. The London FTSE was up, and in Germany the DAX was up as well. Our market on Friday was down 2.6 points, slightly down by less than 0.1%, and closed at 6,406. Remember that our market over the last 3-4 months has dropped by nearly close to 500 points, as we've seen before, nearly 6%. On Friday, the best performing stock was CBA, was up 1.1%, followed by NAB, 0.9%. Worst performing stock was AMP, down 4.9%, and Telstra was down 2.6%, nearly 10%, to $3.77. Remember, Telstra was up to $3.98 or $3.99 some time ago. And by the way, if you look at Bitcoin, Bitcoin, by the way, was actually was up slightly by $47 on Friday, up to 10,420, and that converts to approximately 15,368 Australian dollars. Now, when you look at volume, we believe volume is a very important indicator. We can see, first of all, that over the full 10 weeks, the last 3 weeks were actually the declines were a lot higher than advances, and especially last Friday we've seen the changes between the advances and the decline was quite prominent. We've had a very bad week just in summary last week. Now, in terms of daily, you can see that the last days, even though the market volume was going up for several weeks or several days prior to the last 2 weeks, however, Friday, when we've seen the market went up was actually almost steady, the volume was low. When the market was actually falling, the volume was much higher. That is actually a very negative sentiment, showing that sellers are actually driving the market at the moment. So I think, if you are holding on to stocks at the moment, you have to be very cautious about how much profit you've made and how much of that profit you may lose in the future or in the next few weeks. Now, that is our mechanical system that we have designed over the last 20 years. We look at the previous performance of the market, and we try from the technical indicators to determine, or at least to forecast, or let me say speculate on what may happen in the future. The market in America was very strong, as you can see, with the bull and painted blue starting to be red on the bearish, and the number of bearish sells here are starting to increase. And when the S&P 500, which contains a lot more than the top 30, which is of course is the Dow makes up the top 30 multinational companies that depend very much on export. When we see that other than the top 30 are very bearish, that is an indication that the market is being hammered at the moment. And you're looking at gold. Gold has been very strong the last 2 weeks, and maybe it continues to be strong. Based on the previous performance, we have to obviously maintain our bullish position for gold and silver. even though there was small decline on Friday. By the way, gold went up to nearly $1,500 US. Can it go up to 1900? That is the high price we've seen many years ago. It never reached that high record before. Will it be this time? Well, it's not going to happen overnight, but it could take many weeks, maybe even many months. Crude oil, that's the West Texas crude oil, has gone from slightly bullish to bearish, very strongly bearish, and because of the performance last week, we turned neutral. Now, these are the rest for the other commodities. And coming down to the dollar, the US dollar index, which is made up of several major currencies, is starting to be very bullish for two reasons. One reason is that our other currencies are getting weaker because they're dropping their interest rates in those countries, and we've had that particular situation here in Australia as well. And the Australian dollar has gone from very bearish to slightly bearish, with mainly neutral for the trader. That is the conservative trader, aggressive trader, and very aggressive trader. Remember that our Australian dollar versus the US was very on the low 67 US cents, and at the moment is gained a little bit of strength, and from memory is trading around the 67.6 or 67.5. The European bearish, and that's obviously has an effect on the US dollar. Okay, now looking at the chart for the American market, we've got 1, 2, 3 major red candles. That is the last 5 weeks. And if you look at the daily, we've seen here that we've had a major drop. And you can see here the last candle on Friday, even though it's green and it was actually looked like it's a strong bullish. However, over the full 2 weeks, it hasn't really recovered a lot of the decline. Now, I like to actually point out to you a very important indicator here. That thick black line is the 200-day moving average. Every time the market drops below that line, the market starts to be jittery, mainly because it's a very important indicator, and if it continues to be below it for several days, several weeks, that is definitely bearish. But somehow the technical speculators believe that it hasn't really fallen below that line and stayed below it. So we might be seeing a flirtation around that line for the next few weeks. If it stays above it for a number of days, we might see that that is actually the worst we've seen for a while. If it goes back and flirts with that line and drops below it, then we have an indication that it is very likely that the market is actually in a turmoil and may go down. Now, looking at our mechanical system for our sectors, without going into too much details, we've had in the middle a lot of blue cells turning into some red and some yellow. Yellow mean indicators are neutral. And now we can see last week we've seen a lot more red, especially for the aggressive trader and the very aggressive trader. If you are a very aggressive trader, please be aware that we are in a bearish, aggressive market at the moment. Now, looking at our 2-week ASX 200 chart, we've had 3 candles, very strong red candles, indicating the market has actually dropped from nearly 6,900 to 6,400. That is nearly 500, or we can say that's more than 5% drop, nearly 7% drop. Now, that is the daily. You can see we've had in the last 2 weeks 2, 4, 5 very strong red candles, recovering some of that drop, and then continue the drop last 2 days in last week trading. Look at the mechanical system. I don't have to tell you more than except that Newcrest Mine was the only company that was actually bullish and turned to still bullish for the investor and neutral. And so is Woolworths for some reason. Woolworths continues to be bullish, and all the rest we can say they are into a declining trend or maybe a small correction. Okay, finally here we have what we call the bull charts, where we actually try to pick volumes, the change in volumes. Starting with the top 50, above here we see that James Hardie on Friday, no sorry, that's actually the weekly, so over the last week James Hardie had 142% of its volume. The usual volume was 9.5 million, and last week we've seen 13.5 million shares changing hands, and you can see that that's actually on the positive side. That's the bullish side. Treasury Wines also was slightly above. So if we're looking for something to trade today, we might see that James Hardie for the top 50 on the bullish side. Now when it comes to the negative side, top 50, AMP had a lot of volume. Instead of 70.7 million shares transacting hand, we've had 262. People were dumping AMP. So if you want to go bearish on a particular company, maybe you want to look at AMP. But by the way, before you take any action, always you need to consult with your financial broker or with us. All search as well, because the oil price was down. Now we also, for the speculators, there is a company called Baby Hunting. Okay, I don't know about this company much, but it's worthwhile looking at it. WPP ONS, another company. On the bearish side, Rural Funds and GUD Holdings had very high volume last week. Okay, before I go, I want to mention to you that we have a disclaimer. I don't know your financial circumstances, and I said before you take any action, please consult with us or with your professional advisor. There is no guarantee that anything we said that will guarantee you success or failure, so now you need to be very, very cautious in your trading. If you have any questions, of course you can ask us some questions. You can send me an email, george@fssecurities.com.au, or if you call my mobile, that is the number here. If you're ringing from overseas, you put 61, you don't need the 0, becomes 61 411 25 9526. Happy trading, and hopefully you enjoy what you do.